Okay. And let me explain to you guys what I was doing. And let's move this, right? So I was playing what I was looking at here. I was trading like this, like inverted, what I was looking at as an inverted head and shoulder pattern, right? Something that looked like that. So let me do this here. It was like this. And at the end of the day, we were trading near lows of the day, like 171.70, and my stops were down here. Okay, I had my stops down at like 170.70 something. Small position, because I already know liquidity is bad in the market as it is. So, like I said, my position size is really is was really small. But what happened is there was this news that was released about a Gilead drug. Now, there's a lot of speculation about this drug. It's not given in a controlled environment. It's in a controlled environment rather, and the patients are not severe. Some are they're not critical. Some are just in severe, and if they were expected to live anyway. Blah 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 blah. There's all this speculation about the article. We could go on and on and on and around in circles about it. But the fact of the matter is that it was a positive article regarding a treatment for the COVID-19 virus, and the market really liked it. So at the end of the day, when New York closed, we saw this strong rally in equities at the end of the day. We saw a strong rally in the Australian dollar. Oh my gosh, I'm going to sneeze. Hold on. It's allergy season here, guys, so you got to bear with me. We have two seasons, hot and warm. And when we go from warm to hot, spring and falls here is like, everything grows for like a month before it dies. And so that is what hits me. Anyway, so when that news article came out at the end of the day, futures ripped, Aussie ripped, and the euro Canadian, or the euro Aussie, excuse me, fell, and it was falling like at 20-30 pip clips. And my spreads were super wide, with JP Morgan, because it's institutional. They don't run during periods of low liquidity. They don't run as tight as spreads, especially during a rollover period, because they don't want to take the other side of a trade. If you come hit the market with, a few million of some currency like this, they'll have a 20-30 pip spread on it sometimes. And anyway, what happened is, we had just very little liquidity and a big move. And that is really a product of the market showing what you can call surface liquidity, the bid and ask that you see, versus any substantial size below or above the market. And we're seeing a lot of that. And I was like I said, I was reading this report, and by the time I got out in the 90s, which was better than my stop, but still, the fact of the matter is things were moving quickly. And you have to be really careful. This market moves erratically on headlines, and when it moves, there's a lot of times there's no exits, because there's no depth of liquidity below or above the market. So that's why, and this is a really good example, and this is why I wanted to talk about this is the time that you should be trading much smaller size positions because of these types of events. Any headline can hit the market at any moment and really, really dramatically move any market that we're trading at this point in time. So that's just, I wanted to give you an example, and this is an example of me taking a loss yesterday in a very thin market during a very thinly traded period of time. during, like I said, it was during rollover, and it does happen, and it happens to all of us. So this, what happened to me, should be a lesson to you, just to be very careful with the size that you're trading. Um, right? Okay, that's something. All right. Let's talk about equities here. So, and then I'm gonna take a couple of your questions this morning. Steve's going to be here. Stelios is here. Grega Horvat is actually going to come in today, which you guys are in for a treat, because I love listening to Grega and his views, his Elliott wave views of the market. So he's going to be here today. So we got a pretty exciting webinar for you today. So hold on really quick. Let me tweet this out. Excuse me 1 second. I just need to tweet this out. I was talking to guys in my office, so um, okay. And thank you guys for supporting what we do here. And I just tweeted out a link to the webinar. If you guys want to help us out, if you want to help us out, retweet the links for this webinar, because that helps us out. I know some of you are 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 members of Forex Analytics, and I appreciate that. For those of you that are like, man, I've been wanting to be part of Forex Analytics, I just can't do it right now. Well, do us a favor, retweet some of these links so we can get more listeners in. That'd be awesome. Appreciate that. Okay, thanks, guys. So let's talk about the S&P. So this is that late day movement in the S&P that took us right to the top of the resistance. Now, remember, this is the resistance zone that you know we've been talking about for, I think I've had it drawn up here for the last couple of weeks, and we're knocking our head up against it. And we have to also understand that there's a 618 retracement just above here. And it does, to me, seem like that we're going to come in and test that 618. As I mentioned to you guys yesterday, I do believe that we overshot to the downside down here, overshot to the upside. We're heading into May, seasonal time that you know, you know, sell in May, go away. I think we're going to be running into that as the market has priced in a recovery. All right. And this is like a conversation that I had yesterday on the daily roundup webinar for the Forex Analytics subscribers, that I think that we're going to be finding some sort of resistance here soon, and we're going to come right back into this. We're going to form some sort of range through the summer, and then whether we go higher or lower probably has more to do with after the summer. I'm just saying from here, you know, is probably going to have more to do with a vaccine. It's going to have more to do with what the recovery landscape looks like with not just U.S. based companies, global companies. So I'd be very skeptical about being on the long side up here. There are a lot of funds that are chasing the market right now because they're under invested. So that's going to be like probably the last leg of this move higher that you're seeing. But the fact of the matter is, I don't want to be too bearish risk while we're below this trend line, of this channel, which for right now, and we can move this, now comes in around 2750. So while you're above 2750, you just have to be a little bit more careful being on the short side of risk. Like, for example, being long the Euro Aussie. The whole reason why I wasn't too big of a position yesterday in the Euro Aussie, thank God, is because I knew that the equity markets are still bullish here. We start dropping below here, and then I start being a little bit more aggressive with the quote unquote risk off type of trades. Now, one of the things that I also want to talk about this morning is the euro dollar. And this is a conversation that we had yesterday on the daily roundup webinar, but I want to want to talk about it because, my initial thoughts were this. Okay. We're going to get a move that looks like this. I tried to play and something like this. Okay. Or I, was thinking that we could have done something like that too, but I was originally looking at that. Now, I played the dollar on the long side, or excuse me, let me take that back. I played the euro dollar on the long side a couple of times right through here. But when we broke through this trend line, I think this happened overnight. I was like, I got a little, skittish as far as, trying to trade the euro long, the euro dollar per se, not euro crosses, just the euro dollar. We dropped through the support, and then yesterday we dropped through the support again. And notice that, and was the key trend line. And notice how overnight we basically came back, retested that trend line, and then came off. Now, what do you do with the euro here? I mean, in all actuality, you probably shorting it here makes most sense. Okay, but I'm not, I'm not I'm not short the euro at this moment. But what I'm thinking is that instead of that move, we might actually have a move that looks like this. Now, and there's an interesting article in the Financial Times yesterday about Italy saying that they might do the unthinkable, and what the unthinkable would be is um, you know trying to exit the eurozone. Now, because I mean, you think about Italy, they're um, um, or I'm sorry, France. Italy, France. France is Macron was in the Financial Times yesterday talking about that. I don't know why. I was thinking Italy because I was thinking of the cases and the death tolls there, but France has also been hit pretty hard as well. But the chances of that happening, I think, are pretty slim. But there's probably going to be a lot of political theater, which could weigh on the euro moving forward. Now, I'm not, like I said, I'm not trading the euro just yet, but I'm a little skeptical now of trying to trade it on the long side because we're below this trend line. Now, one of the other things that you have to think about as well is if the stock market starts to show some signs of weakness up here at these levels, which we're in the sell zone as far as I'm concerned. We're in the sell zone. We're in the levels that are going to find pretty good resistance up here. Between the 618, the 618 here. The resistance, previous support. Highs from early March. These are all levels that are going to provide some sort of resistance for the S&P. Well, because of that, I think we have to be a little more skeptical of how we treat the dollar, because if the stock market does start to sell off, that means the dollar will probably strengthen. All right, let's not lose sight of the idea. And even though I'm not short the Aussie at this moment, okay, let's not lose sight of the fact that the Aussie did stall this week at a 618 retracement of the this entire move. You're talking from the end of December, January 1st, basically the yearly move where we stopped at the 618. It's a 78% retracement of the last move. Okay, and we stopped there at 64, 64 and change. Does that mean the Aussie is a slam dunk short right now? No, because I do believe if stocks continue higher, the Aussie could break out, and we could see maybe even the 66 cents. But at the same time, you got to be a little careful with risk, because if stocks roll over, then the Aussie is probably going to roll over here too. And I'll be looking for, as you can see, I have a little alarm set up around this 62.60, which is 100 pips away from where we're currently at. But if we break through that, then I'm going to be pretty much in the camp that equities are rolling over. That's the camp I'll be in if the Aussie shows it first. You know what I mean? So I'm watching the Aussie very carefully at these levels. The Kiwi also Kiwi's really been underperforming. I mean, we only retraced 50% of this retracement. Same move that the Aussie did, but the Aussie did the 618. The Kiwi really struggled, as we hit 61 cents. Now it's up a little bit right now, and it's holding, but it still looks like damaged goods, if you will. So I'd be really interested in the Kiwi if we rally back to 61 cents and then fail. That would be a really good setup for me to be on the short side of the Kiwi. Whether you play against the Kiwi itself or maybe even against the Aussie New Zealand looks pretty damn bullish. You have to keep in mind this Aussie Kiwi, we're above the 200-day moving average and we're consolidating above the 200-day moving average. This is a pretty stout move. This is a big right here is a big false breakdown. You know, I have a very hard time shorting the Aussie New Zealand while we're above this level. And I've been thinking myself, if we get back below the 200-day moving average, I'd be more interested in shorting it. But while we're consolidating above, here, it doesn't look bearish. It may be coming off today, but it still looks pretty bullish. And like I said, if you don't want to short the Kiwi dollar, the New Zealand US dollar, the Aussie New Zealand might not be a bad play, for longs, just if you want to take the dollar out of the equation as a whole. All right. Last thing I want to talk about before I turn it over. Well, I want to bring in Steven Stelios here in a moment. I'll bring in Stelios first. This is the US dollar Japanese yen. Now, the US dollar Japanese yen, I actually tried to buy it last night. I bought it right here at 107.98. We traded above 108, and I was like, oh man, if we break out, this is going to be a big double bottom. So we're trading at 108.10 or 108. I'm sorry, we were trading at like 108.05, 108.07, and then some articles came out about that drug, and it was more of a negative spin. And I'm like, you know what? I took it off, and I just flatted my trade. I just got out of it, and it's turned lower since then. I can't ignore, and I don't think we should ignore the fact that we are trading above this 107. And I believe while we're above 107, you got to be a little careful with it. I was thinking, if we can get above 109 and 109.30, this is going to be a pretty bullish upside breakout. It'll be a double bottom. It'll take us right back up towards 111, 111.50, 112. But overnight, you can see it's just kind of weakened. Excuse me, really quick. It just kind of weakened, and so now I'm not really too sure what to do with the dollar yen. I am going to be bullish the dollar yen if we are above 108 and equity markets maintain these gains. The Russell 2000, by the way, was down like 2.5% yesterday. It was leading the downside. It turned around and it's been limit up overnight, pretty much all night long. All right, and if you take a look at the S&P, we're up 2.7% in the S&P. The Dow, as I'm speaking, is up 3. Here, let me just show you. These are my Bloomberg charts. You can see this is the Russell. We're up 5%. We're limit up. That's why you can see this flat line across here. Nasdaq futures up 1.8. E-minis are up 2.7. Dow futures are up 3% or 730 points. The reason why I bring that up is because risk appetite's holding up well. So if stocks can end the week strong, that might be enough to drag the US dollar Japanese yen from these current levels back up towards 108. I do believe if we get above 108, then that takes us back to 109. I'm not trading the dollar yen right now. I traded it last night, got out for a flat, and then I've just been watching price action. I'm surprised it's as weak as it is with as strong as equity markets are this morning. Anyway, now I want to bring in Stelios here in a second, but let me answer a couple questions really quick. Uh, Chris said, I started a GoFundMe for Dale's internet bill. I don't think it has anything to do with that. I think his internet has more to do with infrastructure, and because he has a tech coming out today. It's not. I'm telling you, for those of us that live in the United States, and I know, living here in Arizona, sometimes I feel like I'm dealing with third world internet. Maybe we are third world. I mean, you go different places and internet seems to be much better. But anyway, Dale's internet is being worked on today. Ziggy says sneeze, step back 6 feet from the microphone. Adam asks, would I re-enter that Euro Aussie trade? You know, the Euro Aussie. I mean, I've thought about it. I sat here this morning and I'm like, okay, well, if you look at the Euro Aussie, let's note that we're in a descending channel, right? So the channel looks like this. And let me get rid of this blue line. I don't need that. All right, so we're in this descending channel. So what's obvious to me is, a break above this resistance right here would be pretty bullish, right? So I mean, if you're willing to take on a little bit of risk and you're like, okay, well, I'm willing to buy here, and if it drops below 170, I'll just get out. You could take that trade. I don't think that's from a risk reward standpoint. I mean, if you're going to trade this as a range, buying it down here, putting a stop below here, or if we get back up towards 173.50, and you go, well, I'm just going to short here, and then I'm going to put my stops above. Sorry. This channel resistance, I'd do that. You can do something like that. So I've thought about it, but I'm not fully convinced that the equity markets are a sell here either. If I was convinced that stocks are going down, I'd be long right here. I do believe that if we come out of this range, right? Let me zoom a little bit. We come out of this range, you've got a range move back up to 177 and change, or a break below the range takes us to 166. So I think you can maybe wait for that range to break and then make a decision from there. I think that's probably the safer trade, right? Sai asked about the US dollar Japanese yen. Amira said the IWM, yeah, the Russell, that's correct. You guys were asking a link. I probably from the news stories or whatever. I don't have them right off the top of my head, or right here. Tarek said bearish Aussie US dollar 8-hour harmonic is bearish. Let's take a look. And I'll just keep it on the 4-hour chart. I'm depending on how you want to look at it, you're probably thinking something like that. Look, as far as I'm concerned, as long as the Aussie is below 64 and change, I wouldn't want to be bullish. But at the same time, it's holding up pretty well, and so are equities too. It's been a very, very frustrating short for those of you that have been shorting the Aussie dollar, like I have this week. It has been extremely frustrating. So, will it eventually roll over? I mean, yeah, May. I think if I'm gonna take a shot at the Aussie, I'm being on the short side of the Aussie. It's going to be back above 64 cents because I think that's your best risk reward at that point, right? Richard said dollar yen is dropping rapidly right now. Yeah, the dollar yen. I don't know why the hell the thing is as weak as it is. And maybe a lot of people like me bought it overnight when it was trading close to 108 and are now just getting stopped out. Because it looked pretty bullish last night. I mean, as we came, towards 108, it looked like it was going to break to the upside and then kind of fizzled out. Anyway, I know we have a few more questions, but I want to bring in my colleagues Stelios and Steve if he's around. Good morning, Stelios.
Good morning.
How
I'm
are you
here.
doing?
Morning, Blake.
Hey, good
Very
morning,
well, very well.
Good
Steve.
morning, Stelio.
I know we had some more questions, but we have, for those of you that don't know, Gregor Horvat is coming in today, and he is he's going to cover a lot of Elliott wave counts on some of these markets. So I'm always excited to have Greg on. He tries to pop in once a week. He is our resident in-house Elliotician, if you will. And I always like to listen to his views because Elliott waves are one of those things that I'm just not super proficient in. So it's going to be good to hear his views. He's coming on in about 15 or 20 minutes. So I wanted to be able to pass the mic, if you will, to you guys. But before I do that, Steve or Stelios, if you can post the link for our Traders Summit in the chat box. I want to show you guys our Trader Summit.
Absolutely, I'm going to do it now, Blake.
Okay, so this is the Trader Summit. This is happening in a week and a half.
I've done it.
Okay, thanks, Stelios. So do you guys look in the chat box so you can get the link to sign up? Now, if you guys haven't seen what our teams put together, this is going to be a pretty neat event, and it is. I mean, look at the all-star lineup of speakers that we have for this event. It's pretty staggering. If you're an FX trader, this is a do not miss this event. All right, and we are starting at the normal face webinar time for those 2 days. All right, it's free. All right, so I do have to point out that our sponsors, Forest Park FX, who obviously help us put together our daily webinar, IG Bank, and the CMT Association. So you guys sign up for this event. It's going to be 2 days. Every speaker is speaking for about 40 minutes. Everybody's got presentations about what you can read about what everybody's talking about, and it's going to be a wonderful event. So make sure you sign up today. Tell us about this. Tell us about, Steve, the number of registrants that we have and seats available. Are we going to be able to, or do we have enough seats?
We're going to have 3,000, the ability for 3,000 concurrent participants to be there.
Okay, so that means that you guys need to sign up today, because we will run out of space. That's the problem, because it's not a go. You're not going to the event. You're going to be at home listening in. So make sure you register and put in your correct email, because that's where recordings and all the stuff will be sent. Like all the
and that's where also the link is going to be sent. Because once you sign up to this page, this immediately sends your information to the Zoom event. So if you don't put the correct email, you'll never get back the link you need to follow, nor the notification, so you can actually join in.
So that's super important, guys, because we may have 8,000 traders sign up, but if you're if you got to be one of the first to get a seat. So make sure you sign up. All right. Well, gentlemen, I cannot tell you how happy I am that it is Friday. There's no data coming out today. I feel like I've been, raked over the coals this week. The volatility has been quite high and erratic. So I'm excited just not to even think about anything this evening. So with that being said, I want to thank all of you for being here with me, but don't leave, because Stelios, Steve, Gregor Horvat is going to be here. Yeah, it's going to be a good remainder of the webinar. So I know you guys got things to talk about, so I'm going to let you take over.
Yep. Thank you, Blake.
Thanks, guys.
First of all, for people who want to watch the FACE webinar on those 2 days, you have to register for the event because the FACE webinar of those two events is part of the Trader Summit.
Yes.
So just want to
Trader Summit starts, as you see here in the schedule. Here's the schedule of Wednesday 29th, and here's the schedule of Wednesday 30th. The 30th. If you see FACEs opening up each of the days. So in order for you to even watch FACE these days, you need to register for this event because it's going to be part of it.
And it's also, a free, for me, it's asking what's the cost? It's a free event.
Free, yeah. There is no cost. So one more thing, the vast majority of the speakers are going to leave some time at the end. So you can ask some questions. So you understand it's not going to be the same watching it recorded. First of all, it's going to take some time to upload recordings because it's going to be 6 hours of an event each of the days. So, we'll need to go through some processing to do that. So it should take a couple of days for recordings to be up. Second of all, Peter Schiff, which I'm pretty sure a lot of you are, looking forward to listening to, and Peter Boockvar are going to actually, as you see here, are going to be interviewed live. So they're not going to be doing a presentation. We're going to actually interview them live. And as I said yesterday, and I'm going to reiterate today, any of you that wants to send any questions for them, I will be more than happy to go through and, those questions that they haven't answered, if they make sense, I mean, if they're good questions, I'm going to ask them. Okay.
Great. By the way, our friend Chris is asking what site we use to get the economic data instantly. This is Data Flash that comes for free with Forex. It's a service that's not for free, but it comes to you for free if you're a Forex Analytics member. So that's what we have. And Blake has often compared it to Bloomberg, and it's practically the same speed, which is incredible. Okay, so Trader Summit we talked about. I have a couple of things to mention, and then we can bring in Greg and he can go through his stuff. The main thing, again, is equities. Blake talked about it. We had this theoretically positive development regarding a vaccine from Gilead, or however you pronounce the company. I still think that this is way too soon to be calling a bottom. And, we had the Chinese GDP data earlier today, minus 6.8.
Imagine what the real number is.
Sorry, minus 6.8. Yeah, the real number is
imagine what the real number is.
And another thing I was reading yesterday, and it's really interesting. I was reading about the rate at which people stopped going to, say, restaurants in the US. It started dropping off way before the lockdown. So this is all about confidence, right? People and how confident they are to go out again. And I've been saying this every day. Assume tomorrow there's no cases, nothing, and this thing is pretty much beaten. Do people go out straight away? They won't. Do people hire back into their companies the people they fired? Of course.
Everybody. At least, you might have some of them, but will they hire everybody back?
Yeah. No. And you have, today I was looking, Italian car registrations, month on month, minus 82.6%. Well, almost gone down to zero. Will this go back to regular levels?
Still, even locally, Greece is one of the least hit countries in the developed world. I mean, amazingly, we've done better than the vast majority of the countries. You know very well that, I have a friend that has 3 different car dealerships. They've closed their sales department long time ago. There was no point.
Makes sense. By the way, Brock is right. Did I say it's a vaccine? This thing is a treatment that they're apparently bringing out. So, my view with equities is still, I think this is still a bear market rally. We should be, or at least I've positioned my portfolio to be nearly 0% in equities at the moment. I'm waiting for a dip to get long in. Have no doubt, I think we're going to get all-time highs again within the next, 12 to 18 months. But first, I think we're going lower. And also, you have to look, what are bonds telling you? What is oil telling you? They're telling us a very different story. This is not something that's going to be a V-shaped recovery and we're back to normal. Okay, let's all go out and have beers again. It's not going to happen. I don't think so. I hope it does. I really do, but I don't think so. So I think we have to be very cautious with equities. And you see, and I hear quite a lot of people, retail traders, oh, this is it. If we don't buy now, we've lost the opportunity. We're going to get all-time highs, and it's going to fly. S&P to 5,000. Yes, it will get there eventually, but I don't think so. I don't think we have, formed the bottom yet. So that's my view. I could be wrong. I've been wrong many times in the past, obviously. The other thing,
all of us have been wrong many times. The reason
absolutely.
we're doing what we're doing is that we tend to be right just a few more times than wrong. So everybody should process what we say, filter it through what they think. But keep in mind that people like Stelios has traded billions of dollars for actual banks. So it's not like, your friend over the phone telling you what he read on the internet.
Yeah. The other thing I want to talk about is oil. Oil is confusing quite a few people now because the front contract is down quite a bit, but it's very liquid now. Most platforms and people are now trading the June contract instead of the May contract. So you see the June contract down at $18. Sorry, the May contract $18. The June contract is at, I don't know, 25 or something like that. Yeah, and the June contract is actually flat on the day. And
still, you explain exactly what this divergence means. I mean, what the market prices in, and why that discrepancy.
Basically, the market prices in an upward sloping curve of oil prices, because I think we all know that oil cannot stay at these levels for long, and that's what the market does. And if you look at the futures contracts that trade for each month, June is 25, July is 30, August 31, September 32. So it keeps going up, and that makes sense. But people have been looking at the May contract, which is really what people have been trading for weeks now, and they say, oh, $18, and then suddenly there's going to be a switch to the June contract, and they go say, oh my God, oil jumped $7. Well, actually it didn't. It's just the term structure of the prices that you can trade. Now the question is, what do you trade? I always like to trade the most liquid part, so June would be the one to trade now. But again, this is a personal preference. So oil is dropping in the front month, but really the rest of the curve is actually going higher, and that's why you're seeing commodity currencies doing well today, like Norway, Canada, Aussie, Kiwi. They're all performing well. So just be careful when you look at oil prices when you have price discrepancies like you have now on the yield on the curve. This is going to be a big difference from one future to the next. Usually there isn't, but now there is. So just be careful. And this is, again, one of the main reasons why it's very dangerous to be long oil in terms of ETFs, because what they do, they buy the front contract, then they roll to the next one and the next one. So every roll you do, you lose money. So oil could stay at the same level, and you're long this ETF, and you're losing money every month. So just be careful when you're trading oil in particular.
Yeah, under different periods of time, to indirectly answer Jason's question, under different periods of time, and during the vast majority of the time for the past few decades, oil traditionally trades in backwardation, which is the exact opposite, meaning there are some supply strains. So the market always prices in, not always, as I explained, more frequently was pricing in that future prices are going to be lower than current prices. So we saw it in 2016 when we moved towards $26. We see it once again, nowadays. The opposite is happening. Oil is trading with a contango. So, the market is pricing in that these prices are unsustainable in the medium term. Yeah. So it is expecting that, at any given opportunity, news or whatever, or action from the OPEC plus, crude is going to jump higher. So the market is pricing in that. The fact that it is pricing in this type of contango is not a guarantee that that's going to happen immediately. So, I mean, the June contract might be trading at 26. That doesn't mean that during June crude is going to go to 26. The market thinks so, and as Stelios said, and as I believe as well, it's a matter of time for crude to turn higher and turn decisively higher. Yeah. Can it go lower prior to that? Yeah, it can go lower. Can it stay lower for much longer? No, it can't.
Yeah, and the main reason is because when it's this low, you have producers who are basically losing money. They stop. So U.S. shale.
Think about it, guys, like that. A lot of you know, and a lot of you respect what they say. Don't fight the central bank. Don't fight the Fed is the most common phrase. Okay. Now think about it. What we are talking about is a much more powerful force than any central bank. First of all, since I mentioned this as an example, being short commodities in the medium to long term is like wanting to fight central banks, because central banks have made it more than clear, both in words and action, that they want higher inflation. Higher inflation means currency debasement. Currency debasement means anything that's priced in fiat currencies going up. Ceteris paribus, meaning everything else remaining the same. Of course, never anything else remains the same, but that means that the force of central bank actions is to push commodity prices denominated in fiat currencies, especially the dollar, higher. Okay. Okay, Stel. Thank you, Stel. So, on one hand, if you believe that prices are going to stay, as low or even go lower and stay there for longer, it's like you want to fight central banks. Second of all, it's like you want to fight the most powerful force in any economy, which is demand supply. Simply put, the vast majority of producers are losing money by producing crude oil at prices at around $20. So do you think they will keep producing indefinitely at a loss? There's absolutely no chance in a million, which means that, demand supply is going to rebalance price on its own. If price remains, the more price remains low, the more producers are going to go out of business or temporarily shut off production or whatever else, which means that price has only one way to go, which is up. Now, of course, does this mean you can't lose money being long? Of course you can lose money, because it's also about timing it, right? And as I said the day before yesterday, you might need a few attempts, but if you don't jump the gun, and once you get the proper reversal, in all honesty, crude can move 100% higher within a few months. I mean, it can move like from $19 to $38 within a few months, easily. So, there is a lot of potential upside. Richard is asking, is the market pricing in inflation expected from oil at final mile shortages due to COVID, its effects, etc.? I'm not sure I totally. Is the market pricing in inflation expected from oil at final? First of all, oil and energy in general are very volatile. That's why we distinguish, core inflation, core inflation, and inflation, and nominal. I mean the headline inflation. Okay, so yeah, crude, of course, always affects inflation, both directly and indirectly, because keep in mind, it's not only the direct costs involved with energy prices, it's also the indirect costs. I mean, you need energy to transfer items, to produce items. There are a lot of materials that actually need oil to produce. I mean, oil is a material of production, like plastic, right? Greg, is that you?
Hey man, yes, I'm here.
Hey, welcome to the party.
Hey, what's up? How are you?
Good. How have you been, mate?
I'm fine. I'm just listening. What are you saying? Last time I also heard that some countries may favor the crude oil to be weak because their currency is so depreciated and they are selling crude in US dollar that they make more money in this timing than in other times when the crude oil is higher, because as you know the markets are discorrelated to this.
Yeah, but anyhow, one way or another, Greg, crude can't stay at these levels for much longer.
Yeah, of course not.
I mean, it can go even a little bit lower, but it's going to be very, very temporary. So, it's a good pass. you can start by showing us your count in crude, and we can take it from there. Just very, very briefly. A friend here that asked about USD CAD, since it's correlated. Gregor can have a look at it, but I was expecting support at 138. We almost made it there. We stopped at 138.50. We seem to be breaking out. So I think USD CAD is one of the best looking USD pairs out there. What do you think, Gregor? And grab the screen, by the way.
Yeah, just a second. Okay, now I should select window, right?
Yeah.
Okay.
There we go. We have you.
Okay, so firstly, let's talk about dollar CAD. Well, dollar CAD, I think, is headed to the upside. It still didn't manage to break this 1.47 level. And if we consider the potential bullish head and shoulder interpretation, this also is pointing towards 1.5 target. So in my opinion, this is only a corrective setback from the highs. And if we look at the 4-hour chart, you can clearly see the several overlaps here. In fact, this recent push to the upside looks like a broken wedge here, or ending diagonal in final.
I'm 100% with you. Or if you want to look at it from a simple technical analysis viewpoint, the whole move lower from the fifth wave of 3 is a pennant. Yeah, it's like a large pennant.
Yeah, of course. And so, in my opinion, at least in the short term, maybe next week, we could retest this wave X swing high here around 1.4350 level. This would be the first upward projection, but obviously in either scenario, you will get a wave 3, meaning that leg will be extended to much higher prices. But based on the short-term structure, I mean, we have a very nice and clear 5 waves up here, and it looks like that we are now in a correction. Maybe another retest of 61.8% could occur. So like I'm saying, next week, I think that there can be a bounce to higher prices. And since you mentioned crude oil, it looks like it has room for more weakness. I'm looking towards $15 per barrel for this fifth wave. And as you know, even if we reach maybe already today this $15, I would be looking for even lower prices because we need 5 subways within wave 5.
Gregor, people say that you sound a little bit far away. I have no problem hearing you. You do sound a little bit weird, like you are far away from a microphone.
Yeah, because I have a microphone linked to the camera. Maybe that's the issue.
Can you switch to a headset?
It's a better now?
Yeah, it is better.
Okay, perfect. So until we have these 5 subways down within wave 5 completed, that's how long we need to stay bearish. So during this time, when this impulse is unfolding in fifth wave, I think the dollar CAD can easily reach much higher prices. So that's for the short-term view. Now, regarding the longer-term view, we are here definitely in some late stages of this very big wedge that could be unfolding. Here we are now at the lower trend line, so it's the potential support zone, but of course you know that markets are very volatile. Even from here you can see another maybe even 50% drop before real recovery mode is here. But based on timing, I think that later this year prices will be higher.
Yeah, I think later this year prices might be a lot
higher. Yes, of course.
Yeah.
You could see maybe 100% higher for sure.
Yeah. So people need to understand that keep being short here can make you some money. There is no question about it, but it can really blow up big time in your face. Big time. Because once this thing reverses, it might be brutal.
Yes, I mean, if you're looking at the longer term charts, you should consider more like an investment rather than a trader. If you're a trader, then maybe you will be shorting it. But from a long term perspective, you just need to have an investment approach.
Gregor, you have a rather big property around your house. Start piling crude oil barrels.
Yeah.
Let the kids play with the crude.
Yeah.
You can fill in the pool with it.
And take care of their future in just 1 year. Okay, what do we have left? Do we have any questions for any particular market?
A friend here is asking about, they asked about USD CAD, you showed that. They're asking about CAD yen.
Pound yen?
CAD yen, the Canadian against the yen.
Let me take a look. Yeah, CAD yen, I mean, it's a very tricky at the moment, but always when you have such a sideways price action, I think that it's a corrective, yes, and that we will see room move to the downside. Maybe there will be a triangle here unfolding, but even WXY, meaning a deeper correction, is also, yes, a valid option. So if you're looking to trade this pair, I think that you should wait a little bit longer to really maybe link this pair with the risk of if stocks will come to the downside, which I think can happen next week, then this pair will also likely break lower. But for now, it's a little bit early.
We have questions about S&P, Nasdaq, the 10-year notes.
Okay, I have all of this I will try to link all these markets. So firstly, I will look at the Aussie dollar, okay? Now, Aussie dollar is making a free wave recovery from the lows. So for now, it's a little bit tough question to say or answer if maybe this was a wave C high, or are we going to see more upside after a pullback into wave 3? But what I really like is that dollar Chinese yuan is definitely looking corrective from the highs, meaning that more upside here will probably cause more downside on Aussie dollar. Okay, so that's a 4-hour chart of dollar Chinese yuan. Now looking at a higher degree time frame chart, you can see that the fifth wave is missing here.
Yeah, so ascending wedge.
Yes, but another leg here can easily occur in the upcoming weeks. So it means that Aussie dollar could either slow down for a sideways consolidation, or maybe even move impulsively to the downside. At the same time, I'm looking at the S&P 500, since we know that commodity currencies are linked to risk assets. So
inversely correlated to it.
Yeah, so if we look at the S&P 500, I know that is bullish, and I have been looking for this recovery, but notice where we are at the moment. We have so far still only 3 legs from the lows. We are at this gap, which was major breakdown here at the start of March, and you have here wave third leg compared to the first leg is equal around that level. So everything is pointing to me that at least we will slow down here, even if just for a free wave drop. I think that weakness could occur, and this would also put some bearish pressure on.
And if I may add a little bit higher, just a little bit higher, I'm with you. First of all, the zone of resistance I had was 28.95, which is a quality of the 2 legs higher, but we also have the 61.8 from the whole move lower at 29.33. So I think, anywhere in that zone, this rally can really fail. I think we can even see new lows.
Yeah, but I would be a little bit more careful with the new lows. Why? Because I'm looking at German DAX, and German DAX actually has a very nice clear 5 waves up. So I think even if we see a pullback, I really would not be surprised that this would be just a temporary setback, because I also noticed that a lot of traders, analysts are expecting actually a new lows to be seen here on stocks, and I assume that this stock market could either go sideways or even higher until even those who are bearish at the moment will also become skeptic and maybe give up on their view. That's when the real reversal lower will occur, when will be least expected.
Okay, good point.
Okay, so
what about yields, NASDAQ, treasuries, etc.?
I will also look at the Nasdaq now and then.
Oh yeah, absolutely. It's much stronger, by the way, the Nasdaq.
Yes, it's much stronger. So if anyone is looking at Bitcoin, maybe you can look at it now, because technology sector looks to be very strong, and you had a very nice push to the upside in this week on Bitcoin. It looks like a small bull flag is going to be broken, and that we could actually fly higher. But anyhow, even here on Nasdaq, now imagine if this can easily be wave 3, not wave C, because it's an extended lag, much more compared to the first lag. So if this is an impulse in progress, then you know that the setback on the S&P 500 will also likely be only a corrective wave, right? So, however, I'm expecting a pullback, but just be aware that could be another correction, not necessarily a bearish continuation.
To put things in context, Gregor, okay, we have two scenarios here. One of them having seen the beginning of another leg higher in stocks and having already found a low. What kind of count would that imply looking at a longer term chart?
Actually, I'm looking at two wave counts here on the longer term charts. Okay, but the first and the primary count is that we completed this flat correction. Mm-hmm. And the reason why I'm looking at this structure is because, as you know, it's been the case in 2008. It's been the case here in 2018. It's been the case here in 2011. Always when market is falling very sharply on stock market, there will be obviously a lot of fear, and no one will be able or allowed to call a new bullish trend because it's just too much fear involved. But mm-hmm. Actually, that's always what happened. Always after a very strong drop, a sharp drop quickly ended and market turned back to the upside. I mean, even here, we already crossed the 50% retracement of this corona decline. It means that at the moment when you are retracing more than 50%, you are officially back in uptrend. Okay, so maybe we'll see a little bit more upside from here. In
and
general,
if that's the interpretation that we've seen an irregular correction here, a flat, what would be the implied upside target to finish this long-term bullish move?
3650.
Okay, 3650. Okay.
Yes.
And so, the Nasdaq, I assume that the Nasdaq has the exact same type of Elliott wave formation, right?
Yeah, very similar. I don't have a longer term to count on Nasdaq at the moment, but yes, obviously I would be looking for very similar interpretation, of course. But as we said, we are at a very important critical level at this gap. Okay, so now imagine if we just maybe drop in an impulsive fashion here all the way back towards those April 1st levels, April 2nd. Mm-hmm. Then, of course, I would have no problem to change and say that this was only a three-way price and you are going to see wave C. In such case, obviously, let me just find this wave count.
So since you mentioned it, as we say in Forex Analytics, what is, because that's what you're about to say, so I want to make sure people understand, what is your bull bear line in any pullback to determine if we've already found the low or not?
If we, after a pullback, if we extend up to this wave 2, okay, then you would likely say that you are in a wave 3, right?
Mm-hmm.
Just a second.
And what is your downside bull bear line? I mean, what is the lowest? What is the lowest you want to see the pullback to still feel that the upside is the path of least resistance? Definitely
this support of the swing A or swing wave 1 here should hold at 2640.
Okay, so 2640 for the bullish case scenario is the key level.
Valid.
Yeah, okay.
Exactly.
Okay.
Okay, what do we have next? 10-year US notes. Now, if I want to, I have to change my screen now, right?
Yeah, you can do that by clicking this. Yeah, exactly, and choose another one.
Okay.
We have it.
Here we have the 10-year US notes. I mean, the pattern is very clear, and it also suggests why, at least temporary, this gap or this resistance on stocks could hold, and why maybe Aussie dollar could really maybe move to lower pullback. It's because we have a triangle consolidation. I mean, it's a clear pattern here. For me, it's pointing to the upside. And when this breakout will occur, which in my opinion is not far away, that's when stocks could come to the downside. And it's matching perfectly with the current wave structure on stocks. So I'm not saying that stocks will go below March levels. I'm just saying that at least short-term pullback, I guess, will be seen.
We might also see a divergence here then, meaning all-time highs in the 10-year, while stocks not producing a lower low.
Exactly. It's very possible, because you can see here the 10-year US notes are just actually should be, in such case, you would expect that they are here around March 19 levels as well, but they are actually not far away from the highs.
They're not far away at all, actually.
Yeah, exactly. So when this, I mean, if we are looking at dollar yen, I know that it has a very interesting structure. So a lot of traders.
To be honest, the only word I wouldn't use is interesting. I mean, I've almost stopped looking at it.
Interesting, yes. I see it as interesting because I know which wave could follow next if I'm right with the interpretation. But until this market tops with a fifth wave, that's how long dollar yen is not.
It's going to be stuck.
Yes, is not going to see any real move to the upside. Not even now when stocks are trading higher. So I'm sure that there are a lot of traders probably confused while they are just trying to buy dollar yen. But this one is actually not going with stocks recently. So I think that you should pay attention more to the US yields. And when those bottoms, that's when the dollar yen could be very interesting. It has a very nice ABC structure there. On a daily
so I understand that the next leg in the USD yen, you expect it obviously to be lower while the 10-year breaks to the upside, this long-term triangle. The next question is,
currently, I'm looking
how far? I mean,
towards 105 is my support on dollar yen.
So bottom line, nothing to write home about.
Yeah, I mean, if dollar yen reaches 105 and I see 10-year at a new high in this potentially fifth wave, and then let's say that we see a reversal on the 10-year, that's when I think the dollar yen could be very interesting for longs. But for now, definitely not the case.
Yeah.
Until then.
Yeah, I think it's kind of an abomination. I mean, you know, I've stopped almost looking at it. I have a look at it twice per day. You know, I remember the days when USD yen was like the place to be looking at constantly. To get a good grasp in effects.
Yeah, problem with dollar yen is now because dollar is fighting against yen because dollar and yen appears to be
receive safe haven flows.
Correlations, obviously negative one to stock market in general.
Yeah, but that's not going to last for long.
Yeah, but it can be very helpful to know which currency you should look for against the to trade. Maybe you will rather buy dollar against the Aussie when stocks are turning to the upside, or are you going to buy Japanese yen? So it's very important to look at dollar yen just to see which currency is the strongest.
We have a question, and it's very interesting because, in my opinion, it's one of the best proxies recently for risk. I think we have one more leg to the upside before lower. What's your view on USD MXN?
It's a very tricky.
I think this looks like a decent consolidation, perhaps.
I have two interpretations actually. Now, this first one is actually that we'll see a wave C decline, maybe even wave 3. But with crude oil doing what it's doing, I really don't think it's time to look at this wave count. So I was preparing this one.
Yeah, that's what I think, Gregor. That's the view I have on crude.
You mean on dollar Mexican?
Yeah, sorry. Yeah, slip of tongue. Yeah. That's what I think is happening here.
Both interpretations are valid, but I would not be surprised to see this one playing out. Especially, you have to consider that Mexican peso was. I think it was weaker than CAD, right? But dollar CAD is also pointing to the upside. So if Mexican peso was weaker than CAD, then you can expect definitely more upside in dollar Mexican peso as well.
Yeah, and I obviously think that we can have that last leg higher once stocks pull back or, plummet lower, depends on which of the two scenarios we're going to get. I also think that USDMXN is going to be a wonderful pair to monitor for divergences. So, for example, as you mentioned, the possibility of seeing treasuries push to new highs while potentially stocks not confirming with new lows. I think the same type of behavior would be indicative if we saw it in pairs like USDMXN. USD NOK is another one of interest. I do think that USD NOK has a decent chance of actually not producing a new high from here. So I'm monitoring all these pairs in combination with risk assets to give me a better idea of when we're topping.
Yeah, I'm looking here. Earlier I mentioned DAX. Now notice that this DAX has a very nice 5 waves up. Actually, you have here waves 1, 2, 3, 4, and you have a wave 5. There is also an open gap here from start of April. So if this one is will maybe make a deep pullback here, and this gap is filled, at the same time you would be at the former wave 4 support. And I think that if during this time S&P 500 also makes a pullback, you get a 5th wave high on the 10-year US notes, that's when this DAX can be very interesting for potential long setup.
And just between us, I'd feel much better buying, although the ECB is not that supportive, but having to do with real valuations and value, I would much rather be invested in European stocks than US stocks, personally. That's my point of view as a long-term play. I mean, because as a short-term play, as long as the Fed is playing music the way it does, yeah, certainly US stocks can keep overperforming. But I think that once the dollar turns lower, decisively lower, then especially if you are a foreigner investing in US stocks, you might be making a very decent return from being long, but when you will have to actually move the money out and back to other currencies, you might actually not be making that much. Speaking of which, I think a lot of people want to see what your long-term or longer-term view is on what the dollar is going to be doing here.
Just a second, I want to bring this chart on, and then I will go to the dollar. So here in blue, it's actually overlay with the S&P 500, okay? But I mentioned that the S&P 500 has potentially only 3 waves to the upside into resistance. But notice that the S&P 500 actually bottomed earlier than DAX.
Yeah.
Okay?
Yeah.
So actually, from price perspective, it means that the S&P 500 is actually looking much better. It's stronger. But if you have a German DAX who 5 waves up, who is weaker, then you know that what this could mean for US stock market after pullbacks.
Okay, we have questions, and I think we're going to wrap it up with that. First of all, as I said, I want to see your longer-term view in the dollar. And and a lot of people want to know about the metals, obviously, gold, silver.
Okay, so euro dollar, I mean, it's stuck in the range, and probably I can make around 5 counts on this wave structure. But I still think that sooner or later price will be lower. It just depends what kind of a corrective pattern will unfold in this wave B. Now, one interpretation is that we have a deal with an expanded triangle here, and you will see a retest of this resistance. Or if we go and fall below 107.60.
My vote goes to the alternate count, by the way.
Yeah.
My intuition tells me your alternate count.
Yeah, but the problem is that even if this was a wave E high, even this drop was not impulsive and clear. So it's a very tricky situation. Maybe wave E will make another swing high here to
before turning lower,
10.50, and then maybe a drop.
Yeah.
So it's very, very tough pair actually to trade, because it's definitely not directional at all for the last,
no, it
not
isn't.
only for the last few months, but for the last 2 years.
Yeah, I've kept telling people here, trying to trade Euro USD and USD Yen, in my opinion, is a waste of capital. There are much better opportunities out there, much better.
Yeah. So,
what's your long-term view though on the DXY?
Longer-term view still remains the same. I think that WXY correction here or a deep pullback, deep corrective rally is in progress here, and that we will pass these 2016 highs before a major reversal occurs. So actually no change.
Yeah, but
here.
Then you're looking, from what I see, a lot lower.
Yeah, just let me.
No, I'm with you. Trust me, I'm with you. I'm with you. I've predicted a 30% drop in the dollar within a period of a year from when we see the reversal. And I think that a year might prove to be too much. So I'm 100% with you. And yeah, I would love to see it make a new high first, because you know how the market is. It's going to trap everybody being bullish and happy, the dollar, and then it's going to blow up in their face.
Yeah, exactly. This would be definitely a lot of investors would be unprepared for sure.
What about gold and silver, Gregor? We've seen some type of a short-term topping here.
Yeah, I mean, I'm always getting questions also from members that if I'm finally bullish now on gold, since I have been trying to call a reversal and a top here, and I think I even did the same thing here at the start of the year, but now we are still higher. So, but the short-term structure may be changed, but looking from a longer-term perspective, okay, you are still here in this zone, potential resistance zone. So always when I'm wrong on the intraday counts on the shorter-term structure, I always make a step back and look what is going on the higher degree time frame charts. And here nothing has changed. Now, from a price perspective, you are still at the same resistance that I would highlight even 3 months back. Mm-hmm. So, in my opinion, it's still very nice potential reversal zone that could send these prices unexpectedly lower, or at least, if not in impulsive fashion, at least in 3 waves. If you would say that this was a wave 3, at least.
Now, I have a tough question for you here. And that's not to doubt you, because you know how much, I think highly of you. I mean, you are one of the best Elioticians globally, in my opinion. But how can we combine the potential of an incremental higher high in the dollar with such a huge potential move to the downside in something denominated in dollars? I mean, in my opinion, the viewpoint in the DXY and the one in although I do see the technical validity of this count, I can't seem to be able to, to accept that these two can happen at the same time. Nothing is impossible in the markets, of course, but I consider it like a very, very fringe scenario.
Yeah, but when this wave C will kick in, you know that this wave C could unfold in less than a year?
Yeah, no, I have no doubt.
Yeah, so during this time, it can still, let's just focus on euro dollar, it can still just take 1 year for euro dollar to continue towards parity.
Yeah, but euro dollar moving from where it currently is to parity would assume less than a 10% depreciation, while gold moving from 1750 to 1,000 would imply getting almost cut in half.
Yeah, I mean, the main reason why I would not be surprised by sell-off on gold is probably because it's very bullish from a crowd perspective. It's very crowded trade, in my opinion. So I'm just worried that something unexpectedly will happen there.
That's always a potential in the markets.
It's been the case also in 2011. I remember those times very well. And look what happened just 2 years later.
Yeah, but there is a big difference where dollar was then and where dollar is now in comparison with where fundamentally dollar should be. So I once again, although I'm a very big believer of technicals, and I make no fun of any technical interpretation because I've seen things happen that verify the technical interpretation, and that you wouldn't be expecting just by trying to judge it from a fundamental perspective in advance. But I still find it very hard to swallow that we can see with central banks creating trillions and trillions and trillions of dollars.
Exactly. Yes, I know. But as you know, if I would try to label and destructure differently, I would be forcing the wave count.
I understand.
Yeah,
I understand.
And so that's the big issue, and that's why I was saying that based on the fundamentals and based on technicals, gold is not the best option. It's definitely silver.
Silver, I'm with you.
Yeah.
Especially if we consider that the gold-silver ratio has hit historically unprecedented levels.
Yes. And also, I'm not sure if we had, when it was the last time, that you had silver and crude oil, both at those such lower prices.
Yeah, so cheap. Yeah.
Yes. So even if you think that metals will diverge from the stock market or crude oil or other risk-on assets, I think that these two are very interesting options for long-term investments because
what do you think
prices will be higher.
What's your silver count then? Since you mentioned it, and you mentioned that, which I agree 100% with, that silver is very cheap. By the way, just to clarify, I was looking for this rally in silver to likely fail anywhere between $15 and $16.
Yes.
So far it seems to be failing, although it's still holding an ascending channel that I have. So personally, I want to see a daily close below 1490 to look lower. Just my point of view from a basic technical analysis. What do you think is happening here?
Well, we are definitely at an important trend line here. We have seen a new low. We are now trading higher, but we are now at this potential trend line resistance here connected from 2018 and 2019 swing lows. At the same time, for now, this still looks like a 3 waves up.
Yeah, it does.
So, I mean, we may see a retest of the lows. $8 was my objective. I have been looking for these levels already.
I wish you're right. So I wish you're right. I would really want to be able to buy silver at that price.
But I'm also aware of potential bottom here at around 1150. So again, it's for trading, it's a little bit tough timing at the moment here. But from an investment approach, if you have the right plan, I think that it's on the longer term, I think it's still very interesting assets, even if we do not hit $10.
Okay, so you would assume then, from what I understand, that there is a good chance that silver will not produce a lower low.
if I see 5 waves up here, if I will just continue to see more upside towards $17,
then you think we've bottomed?
Yeah, then I would definitely have to.
And I assume that would mean that you would be a buyer of silver at any pullback towards $15.
Yes, I think that would be a very good opportunity. Yes.
Okay. Yeah, I'm with you. I'm with you. Yeah, if we see going past through the 61.8% fib at $16, I also believe that any pullback towards 15 is going to be worst case scenario 14.5 to 15. I think is going to be a very good buying opportunity, buying area. And if in a miraculous way you're right about a deep depreciation in gold, that would imply a huge reversal in the gold silver ratio. Huge reversal.
Yeah, of course.
Huge. I mean, probably that would be the best trade to be in.
Yes, of course.
Okay, Grega.
Yeah.
Thanks very, very much. As always, it was extremely informative having you here and exchanging opinions. I hope people enjoyed it. So if you haven't subscribed to the Trader Summit, I think, guys and gals, you should. Have a wonderful weekend, and we'll be back on Monday. Thanks, Grega. Bye, mate.
Thanks. Bye-bye.